right. Excuse me. Hey, everyone. How's everybody doing? Welcome to our webinar. If you guys can hear me okay, just want to do a quick sound check. Just let me know that you can hear me. I want to welcome everybody joining us via GoToWebinar, and we are streaming live on YouTube as well. So welcome, everybody. Thank you, Craig. Thank you, Paul. Thank you, guys. Really appreciate it. Nice turnout here. Noon on a Thursday. Kind of home stretch here of this week. Heading into the weekend. Thank you guys for joining me. I'm excited about today's presentation. We get to show you one of my favorite moving average strategies called the EMA squeeze. It's a terrific swing trading strategy. You really could start using right away. I wish the market was a little bit better. But my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. I'll be your host for today's webinar. In the background is Mr. Stan Heller. Stan is our VectorVest Canada consultant. If you guys live in Canada, you know Stan very well. If you are a member of our swing trading coaching group, you know Stan too. He fills in sometimes as the swing trading coach. So happy to have Stan here. Stan will be answering any questions that you guys have in the background. So to comment or ask a question during the webinar, if you are joining us via GoToWebinar, you can enter a question for us there. Either hit enter on your keyboard or click on the send button. If you can't see that control panel, click on that orange arrow that you could see, and that will make the control panel pop up. If for any reason you can't hear me, please make sure your speakers are turned up. I love this slide because, you know, when I do a sound check, sometimes folks say, hey, I can't hear you, no audio. Well, unfortunately, any verbal directions or instructions that I give to help with that, the person can't hear because they can't, their audio is having issues. So if you're ever having any audio issues at all or video issues, just close out of the session and then log back in. That generally works. But if I'm broadcasting and one person can hear me, everybody should hear me. And if you can't, it has something to do with kind of the specs on either your computer or your speakers are turned up or something's going on your end. So closing the session, logging back in generally helps with any issues that you have with video and audio. What I like for you guys to do is stick with me to the end. We'll be together for about an hour. If you stick with me to the end, I will share with you a copy of the slides that I'm using today. Okay, a lot of slides here, really helpful. And I will be in the program in a little bit, kind of towards the end, but somebody remind me at about, I'd say about 12:50 or so p.m. Eastern time, say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToWebinar control panel. If you're joining us via YouTube, you'll get an email with those slides as well. Somebody remind me, though, because I have a ton of content to cover, and once I get close to wrapping up, I sometimes forget to put the slides in there, but just remind me there at the end. Okay, so before we get into some key concepts on what we'll cover today, I just want to introduce the fact that we will be launching a new Mastering Moving Averages class. It's not necessarily a new course, but it is a new class. We do these 3-4 times a year, and the next one that we'll be launching, the next class we'll be having will be September 13th. That will be our first mastery support session, live mastery support session. I'll talk a lot about that towards the end of today's webinar, but just to get you guys familiar with or aware of that, we'll be having a new Mastering Moving Averages class, so you can learn more about moving averages, how to use moving averages, and not only your shorter term trading portfolios, but your longer term retirement portfolios. Moving averages are great no matter what type of an investor you are or trader. They can be used across the board. Okay. Moving averages, let me get back here. Moving averages remove the noise, and just some key concepts about what moving averages are. They remove the noise and define the trend to help us predict if the stock will continue to move up or down. The stock market could be very noisy. Stock prices a lot of times can be very noisy. But moving averages really help quiet the noise. They help us identify true direction. By the way, you can use moving averages on other indicators other than just price. We have trading systems, one called the Midas Touch, that uses moving averages on our stop price, using moving averages on our relative timing indicator. So moving averages are a great tool to help identify true direction, whether that direction be up or down, on anything really. We're going to talk mostly about price here today, but they just do a great job of, again, quieting the noise and help us identify true direction. So what we'll cover in today's webinar: number one, 5 key ways to use moving averages. And I'm kind of towards the end, I'm going to teach you a complete trading system to pinpoint high probability buy and sell signals, and it's called the EMA squeeze swing trading strategy. One of my favorite moving average swing trading strategies. We'll go over that a little bit later. So why are moving averages so important? I touched on the reason a little bit ago, but they provide a simple means of smoothing price action, making the trend and momentum more discernible. So we're used to, maybe using moving average, but to recognize the slope of those moving averages helps us identify the strength of the trend, the momentum of the trend. Crossovers are great to identify true change in trend, but as that trend develops and emerges, the slope of the moving averages, or lack of, will help us determine if that trend is strengthening or weakening. Not only are moving averages a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, and MACD, just to name a few. So what's the difference between a simple moving average and an exponential moving average, or an EMA? Well, traders with a short-term perspective, like swing traders, if you're a swing trader, your average holding period maybe anywhere from days to weeks, maybe a little bit longer. We're not talking, we're not going to hold on to trades for 6-9 months, a year. That's more position, longer-term investing. But swing traders tend to prefer exponential moving averages. EMAs react faster to price changes, so there is less lag. Now, with moving averages, in general, they are lagging indicators. They're not leading indicators. Okay? Here we have 2 moving averages, both a 13-day moving average. The red line, though, is a 13-day simple moving average, which just simply means you add up all the prices over the last 13 days, you divide that sum by 13, and that spits out your moving average. And of course, every day that changes as the window slides forward, as the 13-day window slides forward. The oldest price is dropped off, the newest price is added. No price within that 13-day window has any more weight than any other price in that 13-day window. It's a simple moving average. An EMA is an exponential moving average, and traders, swing traders tend to prefer it because there is more weighting put towards the more recent prices. It's not a linear weighting, but there is more weighting put towards recent prices with an EMA. Okay? And as you can see here, you got price in candlesticks. You got the blue line is the EMA. The red line is the simple moving average. And you can see, apples to apples here, price is rising. You could see the 13-day EMA is going to hug and follow price a little bit faster. There is a little bit less lag with an EMA because the more recent prices hold a little bit more weight than the prices at the beginning of that 13-day window. Okay? As a general rule, this is how I use EMAs compared to simple moving averages. If I'm looking at a 50-day moving average or longer, a 50, a 100, a 150, a 200, I'm totally okay with using just a simple moving average. It's when I'm using moving averages from, let's say, a 20-day moving average and shorter, a 3-day EMA, a 3-day moving average, an 8-day, a 5-day, a 13-day, a 20-day. Those are some popular short-term moving averages. I'll use an EMA because it just makes more sense that if more recent prices are more important than the shorter-term moving averages, you should use an exponential moving average. With a 50-day and longer, I'm okay with using a simple moving average. I don't really care about the more recent prices in a 50-day window because it's identifying more of an intermediate to longer term trend indicator, right? It's more of an intermediate to longer term trend analysis, and I'm not too concerned with the more recent prices. Okay? 5 key ways to use moving averages. Number 1, define and invest with the trend, whether that trend is up or down. And you want to determine how strong the trend is. So, for example, if price is above the 50-day simple moving average, that tells us that the intermediate term trend is up. Our job is to find buying points during that situation, during the times where the price of the stock is above the 50-day moving average. Okay? To determine how strong the trend is, we'll use the slope of that 50-day moving average or any type of moving average. Number 2, they identify buy and sell signals very simply. Short-term moving average crossing above a longer-term moving average. Now, that can be a 3-day EMA crossing above an 8-day EMA. That's, of course, a very short-term trend signal, right? A short-term buy signal. But that's what we're using, or that's what we look at to identify buy and sell signals. Short-term moving average crossing above a longer-term moving average. Short-term moving average crossing below the longer-term moving average. Okay. Now you can have a 50-day moving average crossing above a 150-day moving average. It's also a 10 and a 30-week crossover called the acid test. Now that's not going to be something that a swing trader would really follow, right? It's more of an investment crossover. Number 3, determine broad market conditions. Is there more buying pressure or selling pressure? So along the same lines as identifying where price is compared to at least its 50-day simple moving average. If price is above its 50-day moving average and the intermediate and long-term trends are up, there is overall more buying pressure. Now, there's pullbacks along the way, of course, but there is overall more buying pressure. If the price of a stock or the price of the market, for example, the S&P or the VVC is below its 50-day simple moving average, there might be rallies along the way, okay? But there is overall more selling pressure. Is the stock near support and resistance? Now, we're used to looking at support and resistance as horizontal levels, right? Well, you can use moving averages, or moving averages can be used to identify support. Now, it's rising support or falling resistance, because the moving averages, of course, continue to move as price goes up or down. So, if you're looking at a stock and you see a nice smooth price chart, right, bottom left to upper right, rallies are longer, pullbacks are shorter. And those pullbacks just happen to stop at, let's say, a 50-day moving average, maybe 4 or 5 times over the last year. Well, that 50-day moving average moving forward is key support for that stock. Other stocks might be different, might be a 20-day moving average. Again, it's not, you got to kind of adjust the moving average to the stock that you're looking at. If the stock's price is falling, the chart is going from upper left to bottom right, and the rallies stop at the 50-day moving average. Well, that 50-day moving average can serve as resistance. Really helps identify, changes in direction and turning points as well. This one's a good one, a key one. Is price extended? Determine if price is overextended and far away from its mean average. We learned about mean averages in grade school, right? And what did we learn? We learned the further something moves away from its average, what is likely to happen? It's likely to come back and revert towards that mean average. With stock prices, it's the same. I will shy away from buying a stock that is overextended and really far away from multiple moving averages. And we'll look at some examples here in a moment. All right. So we want to define and invest with the trend. This is what a prevailing uptrend looks like. We have 6 moving averages here. 200-day, 100-day, 50-day, 20-day, simple. Those are all simple moving average. And then EMAs, the red line is an 8-day EMA. The green line is a 3-day EMA. Okay. What I like to do is I want to make sure that if I'm trading and if I'm looking for a buying opportunity, I'm going to look for these short-term moving average crossovers, these bullish short-term moving average crossovers, right? The 3-day EMA crossing above an 8-day EMA, for example. When the price of the stock and when those moving averages are above intermediate and longer-term moving averages. Okay, buying the dips. You've heard that before. A little easier said than done. But it's easier to do when you're recognizing the fact that the stock price is in an intermediate and long-term uptrend. Institutional moving average is the 50-day moving average, right? Institutions don't even think about buying stocks if the price is below the 50-day simple moving average. So let's be on that side of things, right? Let's play along with the institutions. Again, as traders, we look for these short-term reversals within underlying and intermediate-term uptrends. The rallies in those intermediate and longer-term uptrends tend to be longer, and the pullbacks tend to be shorter. In an intermediate and long-term uptrend, I am not going to short bearish EMA crossovers. Like a 3 crossing below the 8 is not a bearish shorting signal for me if the intermediate and long-term trends are up. Okay? Now, here is a different story. Right now, we're in a prevailing downtrend where the price of the stock is below the 50-day. It might be below the 100-day. The stock price is hitting lower highs and lower lows. I will not take a long position on a bullish 3 EMA crossing above an 8 EMA in that environment. The 3 crossing below the 8 is a shorting signal for me, right? In that type of a prevailing downtrend, the rips are longer and the rallies are shorter. Those short-term bullish EMA crossovers do not provide a high probability trade if the prevailing trend is down. So the whole point here is we want to make sure that at least the intermediate term trend is up, and then we're going to look for these changes in the short-term trend and short-term direction of the stock to take action. Okay? So new Mastering Moving Averages class beginning on September 13th is going to be our first live mastery support session. We've done this class, a bunch of times. Okay, Bob sent Stan an email after one of our last classes that we did. He said, "Stan, you're a very good teacher. I like your style, but most of all, I appreciate the simplicity of your explanations of the strategies. I am more impressed every day by your instruction and content of this series of strategies and systems. Each is very good. In certain circumstances, I can see myself using most of them depending on the portfolio that I'm working with." So we get this question a lot. The question is, during our Mastering Moving Averages class, excuse me, we get the question, hey, which one is the best? You taught us, a handful, 6 or 7 different moving average strategies. Which one is the best? And I don't know if Stan would agree with me, but that question is impossible to answer because it depends on the portfolio that you're working with. Are you managing a swing trading portfolio, or are you managing a longer term retirement portfolio? Well, there's short-term moving average strategies that will work, obviously, in your swing trading portfolio. So it just depends on the portfolio that you're working with. Not all moving average techniques work well all the time. Moving averages, as we've learned already, are trend indicators, right? Well, what happens if the market's not trending? What if the market's channeling, range bound? I will tell you that moving average strategies don't work very well in that type of a market environment. Okay? So what I want to teach you now is a swing trading strategy called the EMA squeeze. So here are some key concepts here. It's called the 5, 8, and the 13 EMA squeeze. So it uses 3 moving average, 3 EMAs, 5-day EMA, an 8-day EMA, and a 13-day EMA. So after a pullback or a quiet period where the 3 moving averages have squeezed together, they start to pull apart once the price of the stock stops pulling back and begins to move higher again. Those moving averages begin to squeeze during the pullback, and kind of follow my cursor here. They begin to squeeze once price stops falling, begins to rise again. You'll see the squeeze, and we'll see some examples here in a moment. They begin to fan apart and begin to trend higher. Using the slope of the 3 moving averages after the squeeze, we can predict if a significant trend change is underway and whether it is likely to continue. A strong upward price move increases the probability of a successful trade. Okay, here are the buy rules. The buy rules are you need the 5-day EMA to be above the 8-day EMA and the 8-day EMA to be above the 13-day EMA. That's a prerequisite. We're also going to layer in an intermediate term moving average, and we're going to use the 50-day simple moving average for that. We need the price of the stock to be above the 50-day simple moving average. So we need an intermediate uptrend, and we're looking for a short-term reversal within that intermediate uptrend. We also need the RT indicator to be trending higher over the last 3 days. RT is called relative timing. It's a VectorVest proprietary indicator. It looks at a stock's short-term price trend and momentum. The day that we take the trade, we need that RT indicator to be higher than it was 3 days ago. And of course, we need the market to be in an uptrend. For example, a DEW up signal. That's a VectorVest market timing signal. I would use any VectorVest market timing, bullish market timing signal, as long as the MTI, the market timing indicator, is above 1. It's kind of another general rule that I like to follow. If the underlying trend of the market is up, I will take short-term timing signals along the way. Primary wave up with an underlying uptrend. That's a buy signal for me. Green light in the price column of the color guard in an underlying uptrend. That's a buy signal. RT combo up signal. That's a buy signal as long as the underlying trend is up. Okay, so just make sure that the underlying trend of the market is up when you're considering this type of strategy. And the sell rule, or your last line in the sand, is the 5-day EMA closing below both the 8 and the 13. That is your last line in the sand. Dick's asking a question. If you're a long-term invest, buy, and hold, could you use this strategy on when to buy a stock, assuming the stock is in an uptrend long-term? What I would suggest, Dick, this strategy honestly can be used on different time frames. We're going to look at daily price charts. Okay? I've seen this work very well on intraday price charts. I've seen it work very well on weekly price charts. So if you like the system, but maybe the daily perspective is a little bit too quick, slow it down by looking at a weekly chart. Apply the same indicators and the same rules, but you're slowing things down a little bit, kind of quieting the noise a little bit more. So it'd be a 5-week EMA. It'd be an 8-week EMA. It'd be a 13-week EMA. So the daily, for a longer-term investor, if you like the signal, the daily perspective might be a little too noisy. I would just slow it down a little bit and use a weekly chart. So here's an example. So pink line here is the 50-day simple moving average. The green line is the 5-day EMA. The red line is the 8-day EMA. The blue line is the 13-day EMA. So here on the left side of the chart, stock price was falling. It was below the 50-day moving average. Excuse me. It stops falling, begins to rise, starts to approach the 50-day moving average, and what do you see? You see those three moving averages squeeze together. Squeeze together. There's the squeeze. We're not trading the squeeze. We're recognizing the squeeze because that's telling us that we're in a kind of stock price is changing direction. Moving over to the right-hand chart, once the price of the stock moves above the 50-day simple moving average, what do we need to see between those three EMAs? Remember, the squeeze occurred prior to price crossing above the 50. As price continues to move higher and crosses above the 50, look at those three EMAs. What are they doing? They're separating, right? They're fanning apart. Very, very important that we don't take the trade until we see the separation between those three moving averages. This is a very visual technique. It's a very visual strategy. We want the relative timing indicator, remember, to be higher than it was 3 days ago. So this is telling us that momentum is building. Not only in this case is RT above 1, but it's moving higher over the last 3 days. That's our buy signal. Now, the buy signal isn't just as price crosses above the 50 and when we recognize the fanning action. It's the following day on confirmation. Okay? Following day on confirmation. We want to make sure the price rises higher than the close of the kind of your trigger candle before you take the trade. All right, so here are the sell rules. The sell rule is pretty simple. 5-day EMA closing below both the 8 and the 13. That is your last line in the sand. As you can see, that is likely to occur a little bit off of the actual top, right? I'm not saying we're going to sell at the top, but there are going to be some warning signals prior to that line in the sand where the 5 closes below the 8 and the 13 that you may want to take action on. First off, do we see a price and relative timing divergence? Meaning, is price continuing to rise, but the RT indicator is not rising, it's falling? That tells us, because RT is such a smart indicator that identifies not only trend but momentum, if price is rising and RT is falling, that tells us that momentum is dissipating. It's weakening. You might not be able to see that with the naked eye. That's why we use this relative timing indicator, because it's a lot smarter than us. Okay? That's an early warning signal. Price RT divergence, bearish divergence, early warning signal. I'm also going to be a little bit concerned if I see the bands, those three moving averages, really begin to separate unusually. Okay? Give me a second here. Okay. Now, remember what I said earlier, one of the key concepts on using moving averages is price overextended? Is price pulling too far away from all three of those shorter term moving averages? If it is, what is likely to happen almost imminently? A reversion back towards those moving averages. That's an early warning signal. Okay? I might look at bearish candlestick signals, like a bearish engulfing or a bearish harami or a one black crow or a shooting star or hanging man. If I see those types of bearish candlestick formations as price pulls so far away from those moving averages, and you got a sizable return, and you start to see confirmation of that bearish signal, I wouldn't blame you if you wanted to take profits. Another warning signal is if you see the 5-day and 8-day EMAs squeezing together. Okay? Now, these are all warning signals that you can take action on. Now, maybe you sell the whole position, maybe you close half of it and let the rest run, and close the rest if you finally get your line in the sand where the 5-day EMA closes below both the 8 and the 13. But let's say you take half off on one or more of these warning signals and leave the other half on. If those warning signals are, don't play out to a bearish 5 EMA crossing below the 8, and the stock price continues to rise, which I've seen happen, you at least have some of the position left on the table, right? But you're booking profits, so you can at least walk away with a win. All right, so here's an example. Here's Mesa. Our buy signal was on January 3rd of 2023. Here, now let's look to December of 2022. What happened? Price of the stock went below the 50-day moving average, 50 days in yellow, by the way. Price of the stock went below the 50-day moving average. It stopped falling, began to rise. There's the squeeze. The squeeze is essentially the 3 EMAs at the same price, right? One on top of another on top of another. That's what the squeeze is. Again, we're not trading the squeeze. In this case, we have to wait for the price of the stock to close above the 50-day MA. It actually closed above here, and it even closed above the next day. But on the next day, didn't quite see the separation yet. Remember, we talked about the slope of moving averages and how that slope indicates strengthening or weakening trend. So we want to see that slope and that fanning really start to play out before we consider taking the trade. And that happened on January 3rd. Now, we took the trade the next day. The RT indicator was rising. It was above 1. RT was moving higher over the last 3 days, and some really good volume coming in there as well. Now, your line in the sand was here on February 24th. That shouldn't say 27. That should say 23. But February 4th of 2023, there was your exit. Did you have some warning signals along the way where you maybe could have taken profit? Sure, right? There were some times where the 5-day EMA squeezed towards the 8, and there was a couple of bearish candlestick formations here that you may wanted to take profits on. Here's a doji with confirmation the next day. But if you're someone that says, you know what, I don't care about those short-term signals, I'm going to stay in this sucker as long as the 5-day EMA stays above both the 8 and the 13. And that's fine. That's your last line in the sand. And if you would have done that with this one, you made 102% in about a month and a half. Okay. Here's another one, HPS, Hammond Power. This is a Canadian stock. I'm going to come back to the January signal, but look at the March signal and look at the April signal. Now, I've talked so far about how price, was below the 50-day MA, right? And first crosses above the 50-day EMA. Okay? And that is an initial signal. Well, if price stays above the 50-day moving average, that 50-day moving average begins to slope upward. That's telling us that the intermediate term trend is strengthening. But you're going to have a situation like we did in February of 2023, where the stock price softens, it starts to consolidate, the 5-day EMA, the 8-day EMA, the 13-day EMA squeeze together, and then you get another signal where price stops consolidating, begins to move, resumes its uptrend. The 3 EMAs fan apart again, and that's another buy signal. So there's really 2 buy signals. There's one where the price of the stock first crosses above the 50-day moving average. That's kind of your initial buy signal. And then there will be buy signals along the way as price remains above the 50-day moving average but softens from time to time. Those 3 EMAs squeeze, and as price resumes its uptrend, those 3 EMAs will fan apart, and those are additional buy signals. So the initial buy came on January 10th of 2023. The sell signal didn't come until August in this case, 8 months later, 150% gain. If you look at Apple, let's look at Apple real quick. Going into the VectorVest program, let's look at Apple real quick. Here was Apple with an initial buy signal here. Right? Initial buy signal here where the price of the stock rose above the 50-day moving average. The EMAs began to separate right in this area here, right? Price crosses above the 50. 3 EMAs begin to separate. There's your initial trade. Here's another situation. I'm going to take price off. Okay? There's your buy signal. There's your squeeze. You're above the 50-day simple moving average. There's your squeeze. You take the trade. Did the 5-day EMA ever close below the 8 and the 13? It did not. The 5-day squeezed towards the 8 a number of times here. But finally, you got your bearish crossover. Would that have been a good time to exit the trade? About 182 bucks. I know the stock price is rallying. Maybe keep Apple on your radar now. I'm not sure if it's a good buying opportunity now, but once price crosses above that 50-day moving average again, like it did back here, and those EMAs begin to fan apart, great entry. But this system can keep you in stocks longer than you normally would. Okay? Here's another example, CDNS. Not every trade works out, as the slide says. But on November 11th of 2022, what happened? The price of the stock stopped falling. It started to rise. It crossed above the 50-day moving average. The EMAs began to fan apart, and the RT indicator volume came in pretty heavy there as well. RT was above 1, rising over 3 days. Why do you think why wouldn't I have taken that trade? Not because it didn't work out in hindsight, but going to see if you guys are paying attention. Going back to what I was talking about earlier, why would I have not have taken the trade on November 11th of 2022? I'm going to give you guys a few minutes here to answer. Why would I have not taken that trade? Either you don't know, or Stephen, no. Stephen says 50-day moving average in a downtrend. No, because when price first crosses above the 50-day moving average, you're generally going to see a down-sloping 50-day moving average. So I'm not too concerned with the slope of the 50-day moving average. No, the 3 EMAs were fanning out. Let's see, Charlie. Yeah. Yes. Moving way too far away from those three EMAs, right? This is a parabolic move. I don't like those. I don't like those that price action. Price is moving way too far away from all 3 of those EMAs. What is likely to happen? You're going to see almost an imminent, reversion back towards those moving averages, which we saw. Here, on the other hand, now here price just barely dipped below the 50, began to rise. This is kind of normal resumption of trend. Volume starts to pick up. Fanning of those 3 moving averages, that's a much safer signal to take than one that's happening on a parabolic move. Okay? Here's another example, Louisiana Pacific. Excuse me. There's your squeeze. Now, in this case, the squeeze occurred above the upsloping 50-day moving average. I like these setups. Okay, I wouldn't necessarily call it a dip, but this is a quiet period, right? It's a quiet period. Price is kind of moving sideways, but there you get your fanning action. Price resumes. In this case, this was almost an 82% gain. The 5-day EMA did not close below both the 8 and the 13 here. They squeezed together, giving you another, you see here, secondary buying opportunity. You can add to the position. Okay, you can add to the initial position that you took back here on January 21st of 2022. Okay, lot on this chart, but I think you guys get the point. Here's your quiet period. Okay. Here, RT is hitting higher lows, confirming that a momentum change is occurring. RT is hitting higher lows. Stock price hitting higher lows as well. But here, finally, price crosses above the 50-day moving average. We see the fanning apart of those moving averages. There's your trade. There's your sell signal. Whoops. There's your sell signal. Okay. Price pulls back. It stays, in this case, it stays above the 50-day MA. Okay. The quiet period or the capitulation is occurring above the 50-day moving average where the 5, the 8, and the 13 squeeze together. As price resumes its uptrend, you can see the fanning apart of those three MAs. Okay. There was your sell signal, 27% gain. And then you really had no other buy signals during this time period. Again, too parabolic. Stay away from these types of trades, guys. Stay away from this type of price action where price is just way too parabolic. You're going to get a reversion back towards that moving average. Now, the hardest and most time-consuming part of swing trading is to find the right stocks with the correct setup early. There's three ways that VectorVest makes it easy. There's the stock viewer. Stock viewer is a list of stocks sorted by our VST indicator. Using the stock viewer, what you would do is you would, let me do it with you here. I'll go into the stock viewer quick. Right, here's a list of all 9,000 plus stocks that we track. I open up the chart. Oh. Come on. You can do it. Ridiculous. I just got to close the program real quick, guys. I'm going to reopen it. Give me a second. I want to take you guys through that one-by-one method and then show you the easier method. Oh, there we go. All right. Oh, is VectorVest having problems? Nope. Okay, there we go. While the program's opening, stock viewer is one way. You can use watch lists as well. Okay, both of these, number one and number two, we call them the one-by-one method, where you have to look at the charts to identify the setup. My preferred method is the Unisearch tool. So the one-by-one method, man, market's selling off today. Ah, gosh. One-by-one method, let's say I go into the stock viewer, look at the top VST stocks. You can go to the S&P 500 watch list as well. Is this an EMA squeeze candidate today? Now, this is what you're looking for, right? You pull up a list of stocks, you pull up the chart, you're trying to identify a stock, an EMA squeeze candidate. No, it's not an EMA squeeze candidate today, right? A little too parabolic today. But when was it? When was PFIE an initial EMA squeeze candidate? Well, let's take a look. Back here in June and July of this year, price had fallen below the 50-day moving average. There's your squeeze. Here's my setup. Yeah, Dick, July 15th? Sure. I would even say probably July 13th. I would take the trade. If I'm looking at this as the hard right edge, do I see the fanning of those three moving averages? Yes. Is price above the 50-day moving average? Yes. Is the RT above 1 and trending higher over the last 3 days? Yes. I would take the trade the following day on confirmation. Boy, did you get it. Okay. Now I'm taking it early on in the session. I'm not waiting, any later than 10 o'clock in the morning. But boy, if you take this trade, I don't know, you might have a $132, $33 cost basis. Let's see. Move forward. Little warning signal, but no crossover. The 5 never crossed below the 8 and the 13. Price resumed. Man, and you're still in it today. But today's not a setup day. I'm not saying today is not a day. You want the squeeze, right? The squeeze happened way back here. So I would look at, this one's actually close to a setup, MOD. There's the squeeze, right? There's the squeeze. And now are we seeing the fanning of those three moving averages? We're beginning to. So this might be one that I put in a watch list and say, price is above the 50-day moving average. It just recently has pulled back off of a new high. The squeeze has occurred about a week ago. We're starting to see the fanning out. Give it another day or two of the stock price rising. But look at this, guys. Look at the initial trade. The initial trade was back here, right? And you'd still be in it. You'd still be in it. Because the 5-day EMA, after the initial setup in May of this year, never closed below both the 8 and the 13. It didn't here either. It got close, but it didn't here either. Very close. Okay? Now, you go through them all. No, that's not a setup. Maybe FN is. It's a little time consuming, but I know this thing is going parabolic. I would never trade this one. Right? So you got to go through the charts in this way. We have a much easier way to do it. And once we talk about the course in a moment, you're going to get, once you register for the course, you're going to get all of these moving average strategies that Stan has so kindly built for you guys. Now, we're not going to insert them into your programs. You build them yourselves, but Stan recorded some videos in the course outline walking you through how to build these scans. So you'll get the EMA squeeze scan, and if I just pull up the chart, now we're getting close, right? I'm going to go through these quickly. Starting to see the fanning action, starting to see the fanning action, starting to see the fanning action, starting to see the fanning action. Some of these maybe you put in a watch list and you wait a little bit longer because the fanning action hasn't quite taken place yet. But you can see the scan has made our lives a lot easier because they're bringing all of these are almost immediate candidates, right? All of them are almost immediate candidates as opposed to the stock viewer where you got to go through a list just to maybe find a handful. So this search group here is going to help you guys tremendously. And that's part of the Unisearch tool. And again, that folder or those searches are given to you with our Mastering Moving Averages course, which I'm about to talk about now. So key concepts, let's just review. Use graph history to give you confidence, like I did, right? So I for example, I went into the stock viewer, I pulled up some stocks. As of the hard right edge, maybe they weren't EMA squeeze candidates, but we looked historically just over the last 6 months, and we saw some really good opportunities, right? Doing that over and over and over again, it's going to give you confidence that this system works. So use graphs. You can visually see the best setups for entering the trades and when you need to prepare to exit. So what we covered today, 5 key ways to use moving averages, and I taught you a very simple, complete system to pinpoint high probability buy and sell signals, and that's called the EMA squeeze. Here are the buy rules, and what I'm going to do in a moment, guys, I am going to put the slides that I used here in a moment in the handout section of your GoToMeeting control panel because I think it's important to have those buy rules, those buy and sell rules on paper. But if you want to learn more about different moving average strategies, that's just one. It's a good one. But in our Mastering Moving Averages course that starts soon, again, September 13th is our first mastery support session, we'll teach you a number of different moving average strategies. Trading using a single moving average. How to trade using moving averages as support and resistance. We'll talk about the EMA squeeze again. Another one of my favorites, two of my favorites, the Guppy, which is a multiple moving average trading system, and surfing the reversal waves. I love this one. This one uses moving averages and Bollinger Bands. This was developed by Dr. Barbara Starr. She is a technical analysis consultant with us. She developed this system. It's fantastic. The Midas Touch, and another one, a bonus system called high-low moving average bands. how to trade high-low moving average bands. There are case studies and homework assignments included with every one of these lessons. There are 10 full lessons here. So what I'm going to ask Stan to do is I'm going to ask Stan to type in the address that you guys see at the bottom, www.vectorvest.com /MA. The regular price for this course is $595, but for you, thank you guys for taking some time out of your day. And as a thank you, we want to extend the best price that we have available, the best rate that we have available for this course, $295. Here's what you get. We are going to meet live 6 times. Those lessons that I just went through are pre-recorded. Okay? The modules are pre-recorded. The mastery sessions that we will be doing are going to be live. We're going to be doing 6 live mastery support sessions and a bonus live sessions as well, and those will be on Wednesday afternoon. If you're a current subscriber or a non-subscriber, we're going to give you the program. We're going to give you VectorVest 7 real time if you don't already have it for the U.S. market, and intraday Canada, again, if you don't already have it. And that platform includes ProTrader, which is our technical analysis searches. You need the ProTrader module to run moving average crossovers and moving average searches in general. Okay? Not only does ProTrader help allow you to run moving average searches, but it allows you to run MACDs, Bollinger Bands, stochastics, support and resistance, channel breakouts, RSI, ADX, and a lot more. Okay, we're going to, again, be doing 6 live mastery classes. Those are going to be Q&A sessions, and we're going to review the lessons that we teach in the course. By the way, you're also going to be granted access to 6 swing trading coaching group sessions during the course. Once you register for the course, you're going to get an email with all of this information. Okay? So the sessions begin at 1 p.m. Eastern Time. The live sessions, they begin on September 13th. It gives you, almost 3 weeks to get into the course, watch as many of the modules and lessons as you'd like before we start on September 13th. But keep in mind, on September 13th for our first live mastery support sessions, we will be covering lessons 1 and 2. For session number 2, which is on September 20th, we will be discussing and reviewing lesson 3. We had to do this, right? Because there are more lessons than there are mastery sessions. So we bunched a few of the shorter lessons together, and those are going to be reviewed in those mastery sessions. If there's any changes, you'll be notified. All right? Prior to each mastery class, please submit any questions you have, homework assignments or comments, any mistakes or successes you're having. This could be setting up your searches or graphs or any paper trades or live trades that you've placed. Bring that stuff to the live mastery class. You can also email Stan at stan.heller@vectorvest.ca. Okay? Here are the lessons. What I'm going to do now, guys, thank you guys for joining me. Boy, I really appreciate it. I'm going to put the slides that I'm using here today in the handout section of your GoToMeeting control panel. So those of you joining me via GoToWebinar, look at your control panel where you're typing in comments and questions. You should see a section there that says handouts. And you'll see a PDF that says Mastering Moving Averages. Please open it up and download it. That's yours to keep for sticking with me to the end. Here's Rob. Rob sent an email to Stan. It says, thank you once again for a great presentation on the multiple moving averages. Your Mastering Moving Averages course, as always, is well documented and has a wealth of information. I really like the 20-day MA channel search. I think the MMA course should be a fundamental course for new and experienced VectorVest users. It has been very educational. Look forward to using the setup/searches of the program to advance my investing success. Warren G. sent an email. He said, my win-loss ratio following my old plan resulted in 51% winning trades with very little monetary gains. I like how he puts plan in quotations there, right? Probably wasn't much of a plan to begin with. I think that's why he wrote it like that. If I would have followed the 20-day MA strategy, I would have netted 75% winners and produced my largest portfolio gain. using the EMA squeeze. Somebody was asking earlier about the success rate for the EMA squeeze. Warren G, using the EMA squeeze, netted 84% winning trades with the second largest portfolio gain. The golden crossover technique, 64% winning trades and the smallest of 3 portfolio gains. He said, I would have gladly taken half of the portfolio gains in any of those strategies. So again, if you have any questions, guys, you can, of course, give our support department a call or just email Stan or I. Okay, email Stan or I. We're your instructors for this course. Shoot us an email if you have any questions on anything that I covered today or any questions about the course. Once you register for the course and you get into the course and you look at the outline, you will see all of the lessons, all of the modules. I think of our courses now as like Netflix. I'm a big binge watcher. I've binge watched a lot of shows lately. I think of our courses as Netflix. You can go in there and just watch everything all at once. Now, just keep in mind that we're going to kind of take baby steps with the mastery sessions and only review the contents of, a few lessons at a time. By the way, when you get into the course, you can see the old mastery sessions that Stan and I did a couple of months ago. They will be replaced. The mastery sessions that we do, guys, for our class coming up next month, they're recorded. Okay, so if you can't make the live mastery support sessions, we're going to upload the recordings within 24 hours of when we deliver them. The mastery sessions that we do replace the mastery sessions that we do now replace the old ones. When Stan and I do another Mastering Moving Averages course, I don't know, 3 or 4 months from now, the mastery sessions that we do then will replace the ones that we upload now for our class. So you get access to the course for an entire year. So you're always going to get the new mastery sessions during that year. Okay, this $295 rate will only be available for a couple of more days. Otherwise, it's going to go to the $395 early bird rate. Regular price is $595, but the early bird rate is $395. So just for you guys here for joining me today, take advantage of that $295 price. It's the best rate that we have available for this course. Okay. All right, guys, thank you so much. A lot of good feedback, a lot of good commentary, good questions. Thank you, Stan, for being here and answering those questions. Again, if you have any other questions, guys, just shoot us an email. We'll be more than happy to work with you here moving forward. So thank you, guys, for joining me here today. Have a great weekend, everybody, and we'll see everybody September 13th for our first Mastery Support session. Take care, everyone.